We're talking again today with Winston Sammut, an investment manager at Euree Asset Management. Winston, welcome back.
Great to be here, thank you.
Okay, Winston, a lot gone on this week. Let's kick things off today by getting your thoughts and views on the news that the US Federal Reserve has flagged an end to its tightening cycle and what this might mean for Australian rates.
Well, it's been very big news for the property sector, primarily, which has been under a lot of pressure over the course of the year because of the rising interest rates. And so an environment where the US is saying there will be rate cuts scheduled for next year is being taken very positively, not just in the property market, but pretty well across the board. But property has done exceptionally well. The REIT sector so far this month is up 9%. And haven't seen the end of the month at this stage. So it's been a very strong month for the REITs because effectively the cost of debt has now stabilised, and I think we're going to see a very good outlook over the next 12 months for property.
Fantastic. And also you said that the obviously REITs have outperformed the broader markets. Any particular highlights in there that any stars? That,
well, a couple of the stocks that are fund managers that they have. They hold a property for a number of clients, like Charter Hall and Centuria have done exceptionally well. Charter Hall was up nearly 11.5% yesterday, wow. And it's up a little bit again today. And that's primarily because the view is that there'll be more fund flows into their vehicles in the coming years, and so that's been seen as a positive step because they're going to get management fees as a result of that, additional management fees.
Yeah, great. And have there been any sort of significant transactions in the property sector this week?
There haven't been any transactions. I think this is an area that needs to be sort of resolved because one of the issues over the course of the year is very much one that we haven't seen a lot of transactional activity, particularly in the office space, because the buyers have been sitting on one level in terms of what they want and the sellers are down much lower. Now that we've seen we're going to see interest rates stabilise, we are hopeful of seeing some transactions take place over the course of the next 6 months, which is going to be a good read, give everybody a good read for valuations. Having said that, a number of REITs have come out with their valuations as at the end of December, the 31st of December. And that's showing some downward trend in valuations. Cap rates have sort of gone up somewhere between 15 to 25 basis points. But I think that was pretty well anticipated, so it's not as if it's a surprise. And that may well be, and that's how investors are seeing things, as the end of the cap rate debacle that we've seen over the last 12 months.
Yeah, no, I hear you. And look, you talked about some of the companies that outperformed. Any laggards that still a little bit slow out the starting blocks this week?
Okay, what's actually been outperforming have been the largest REIT stocks.
Yep.
And primarily because that's where most of the bigger investors, the equity funds are in. We haven't seen that translated across the board in the smaller entities, but I would suspect that as the larger stocks get more expensive in a relative sense,
yep,
that they'll start moving up some of the smaller stocks. So I think the whole sector will move up over the course of the year.
Got it. Now, we're only a week away from Christmas, Winston. Can I get your thoughts on how you think the property sector will perform in early 2024?
Well, I think it's one of those sectors that is going to do well because it's been very much downtrodden over the last couple of years, particularly over the last 6 months or so. And so I think that it's got a good base to start with.
Yep.
But again, you're going to have to see transactions come through. Quality assets are going to be remain quite well sought after. Industrial is still reasonably in demand. It's the office area, the office property sector that's going to be hopefully a beneficiary of these lower rates going forward, but I think that'll take a little bit of time.
Winston, many thanks for your time today. Always a pleasure.
It's a pleasure. Thanks very much. Thanks for having me.
That's our last show for 2023. Winston and I will be back on our weekly show in mid-January. Look forward to seeing everybody then. Take care.
Merry Christmas.
Merry Christmas.